Good afternoon, and welcome to our press conference. Senator Bradley's here, I'm here, and Representative Gebhardt, who is not here because he's in Missouri, has a statement which I think was handed out. Our topic today is the many hundreds of billions of dollars in entitlement programs that are hidden in our tax code these days. You know, back in January, the 3rd of January, when Newt Gingrich had been Speaker for 2 whole days, one of his first actions was to suggest a new tax credit for poor people to buy laptop computers. By my calculation, it was an approximately $25 billion new entitlement program. And even the Speaker admitted a few days later that it was probably a dumb idea. But the fact that he was so cavalier about proposing such a large new spending program is enlightening. Apparently, in Representative Gingrich's mind, he hadn't called for a spending program. He had just called for a tax cut. The difference between that and the spending program, of course, was only who would write the checks, whether it would be the Department of Health and Human Services, say, or the Internal Revenue Service. Doesn't seem to make much of a difference to me, but for Representative Gingrich, it seemed to have made the cost of his plan almost irrelevant. The truth of it is, though, that spending money through the tax code can be just as expensive, if not more so, than spending money through the appropriations process. And today we're releasing a new report on all the hidden entitlements in our tax code, programs that are estimated to cost the federal government $456 billion this year alone. That's an amount that's more than double our budget deficit, and as our report illustrates, the lion's share of these hidden entitlements go to affluent people and corporations. We think that a Congress that is eager to challenge low-income welfare programs ought to be at least as tough, if not tougher, on welfare entitlements for the well-heeled and the politically powerful. If, it's a big if, I guess, if it really wants to bring the budget deficit under control. Tax entitlements now cost the federal government 2.5 times as much as all the means-tested direct entitlement programs such as welfare and Medicaid and so forth. And as our table illustrates, and it's shown up there in that chart, and it's in your materials, tax entitlements will soon cost more than what the federal government spends on defense, roads, environmental protection, and all the other so-called discretionary programs combined. Now, these hidden tax entitlements, also sometimes called tax expenditures, are reductions in taxes that go to people and companies that engage in congressionally favored activities. And they're paid out just like direct entitlements to any person or company that meets the eligibility requirements with no limit on their total cost. We can't pretend that tax loopholes for the affluent and corporations don't affect and hurt, in many cases, the rest of us. To balance the budget, we have to start rooting out some of the most expensive of these corporate and high-income welfare programs in the tax code. And you know, they aren't just hugely expensive. Many of them don't work. For example, industrial investment was supposed to have been stimulated by tax loopholes in the early 1980s, but instead, investment actually fell from 1981 through 85 with all those loopholes in place. And then after Senator Bradley and others got the loopholes closed, industrial investment boomed after 1986. Now, we all know that the special interests love these tax breaks because they couldn't survive the scrutiny that applies to the regular budget. Many of these programs, tax programs, are targeted to industries with lots of political clout. Others give their biggest subsidies to those with the highest incomes. And by sending the wrong signals to businesses and investors and consumers, many of them cost jobs and impede economic growth. Now, our report details 128 separate tax expenditures, 87 of them in the business and investment and savings category, and 41 in the personal side of the tax expenditure budget. In total, as I said, these are estimated to cost $456 billion this year and $2.5 trillion over the next 5 years under current law. Among the items that we think are particularly unfair and bad for the economy are $730 billion worth of business and investment tax subsidies. And you can see in our table up here and the table you also already have, these items include multinational tax breaks, which cost at least $57 billion over the next 5 years, capital gains loopholes, which cost $165 billion, and that's not counting the proposed ones in the GOP contract, tax breaks for mergers and acquisitions, business meals and entertainment, accelerated depreciation, and on and on. Many of these are very targeted to wealthy people. For example, 97% of the benefits of the current maximum capital gains tax rate go to people with incomes over $200,000. Three-quarters of the benefits from tax-free interest go to people with incomes exceeding $100,000. And in sharp contrast to that, most families get little or nothing from the tax entitlement system because they neither earn tax-favored kinds of income nor do they itemize deductions. Now, to be sure, we're not calling for abolition of every single tax deduction and credit. Some of them serve very legitimate tax equity purposes. But we do need a review of tax entitlements that's just as rigorous as Congress is applying to direct spending programs. Now, some of you might ask, why now? Isn't the Congress, under its new leadership, bent on moving in exactly the opposite direction from what we're talking about today? Hasn't the House just passed a tax bill that would vastly expand the very kinds of tax loopholes that we think ought to be closed? Isn't the House Majority Leader, along with a number of GOP presidential candidates, calling for a flat tax that would provide hugely larger tax subsidies to capital gains, dividends, interest, and corporate profits?